Hello, from Otet Markets. This is Ahura, and I will be with you to review the U.S. economic data and market reactions. Today, we had very important data, GDP, PC price index, and also ADP data, ADP numbers. Let's first check the data and see the numbers, and then we can review and analyze the market reactions as well. ADP non-farm employment changed by 62K only in April. It's much less than 114,000 expectations and twice more less than 147,000 market expectations, almost. That means the labor market is getting weaker, is cooling. Even though it's the condition, overall condition right now is not bad, but it's cooling. There is a sign of cooling. Core PC price index in the first quarter increased by 3.5%, much more than 3.1% in expectations and 2.6% in the fourth quarter 2024. While on the monthly basis, this core PC price, while the PC price index also increased by 3.6% quarterly. 3.6%. That's much more than 2.4% printed in or registered when we had in fourth quarter 2024. That means that the prices in the US economy is increasing much more than expected. The GDP price index also increased by 3.7%. Now we can see the GDP data. The GDP, the first primer, the primer expectations or the primer data shows that the GDP, primarily data shows that the GDP or US economic development had a very challenges in it with the challenges that they had in the first quarter fell by 0.3%. We know the challenges like the trade tariffs, the trade war, the tariffs, and also the election by itself. It's affected the economic activities as well. Generally, the first quarter was a very busy quarter for the U.S. economy. So now we can see that all these challenges and all these tensions, they affected the economic growth. And now we can see that U.S. economy contracted by 0.3% in the first quarter, while the prices increased. If we go further and check the more data in the third month of the first quarter in March, we had a little bit different data. Core PC price index and PC price index both on the monthly scale, they were flat, 0%, much less than expectations and previous month's growth. While on the annual scale also, core PC price index increased only 2.6%, less than 3% in February and in line with market expectations. Depending the PC price index also on the monthly scale or headline personal spending inflation also increased only 2.3%. Even though it was a little bit more than 2.2%, but it was much less than 2.7% printed in February. If we add this personal income and spending data also, we can see that the personal income increased by 0.5%, more than 0.4% expectations, while the spending also increased by 0.5%, more than 0.5% but 0.7% personal spending increase. It's more than 0.5% in February and 0.6% expectations. Generally, these data shows that U.S. economy fell in the first quarter by 0.3% or contracted in the first quarter while the prices are increased. As a market reaction to these data, we can say these numbers, they are opposite of each other in more detail, because lower economic growth means that the Federal Reserve or the central bank in the United States should lower the interest rate to support the economy. On the other hand, higher inflation or higher personal inflation, while the spending also is more, which means that the people, they have more money to spend and they have a confidence about their next incomes. So higher inflation and more spending means that the inflation is going to be more sticky, which means that the Federal Reserve is supposed to hold the current rates higher for longer. So now these data, somehow they can confuse the policymakers, or they can make it more complicated for the policymakers to make a decision. However, we know that in the next week, which we will have the next Federal Reserve meeting, we are not expecting any rate cut. So right now, the rate cut is 0% chance for now for the next week. But on the other hand, the Federal Reserve would not give any clear signal about the next decision or what they're going to do in the next meeting or when the rate cut going to start. So now the market is guessing between two rate cuts or three rate cuts each time by 25 basis point. Now the overall market generally price in a two more rate cuts, but we have to wait and see. Now, with this data, we can say that the Friday's labor market data, NFP numbers, will be very important and should be watched more closely to learn what exactly, how is the exact condition of U.S. economy and what Federal Reserve going to decide. More probably, Federal Reserve going to decide the signals that they're gonna give us. So with this decision, so weaker economic growth, lower GDP, and higher inflation. US dollar increased. That's normal. In the weekly outlook also, we talked about the higher rates for US dollar around 101 correction, but generally the US dollar index is in a downtrend and we can expect weaker data. In the midterm, we are expecting between 98 and 100 mark for dollar index. Weaker dollar and weaker economy, almost a flat and slightly increasing, but still it's a weaker than compared with 2 weeks ago. And generally, flat and slight increase in US dollar index compared with the shortfall that we had in the stock markets, weaker economic growth, increasing the market risk, and that can increase the gold demand as well. So generally, we can say that the gold price will continue its side movement with upward tension. So for now, the gold still side movement, but upward tensions we have in the gold. So generally, the price are positive. We are positive about the gold price. On the energy market, weaker economic growth, trade tensions, geopolitical tensions. None of these news and data, they are not. They don't favor the oil and energy market generally. So this downtrend can still continue, especially if the price fell under its 23.6% Fibonacci level. The next step going to be around $55. Now, generally, we are in an overall slight downtrend. On the stock market, weaker economy, we thought the Federal Reserve decide to hold the rates for longer or not to hold the rates for longer. These numbers confirms that the U.S. economy growing slower than expected. Additionally, we have earnings reports these days, and we know that the earnings reports, while they were positive, but they are not such a good positive data. We can say that okay, they're gonna boom the market. So now overall trend is going to change to the side movement with the downward tendency. So now we can say that this correction that we had is almost over. And S&P 500, Dow Jones, and Nasdaq, all of them can continue now, can change their trend now again. I mean, the general downtrend they recover. They go back to their general downtrend. So we are negative about the stock markets. And with the cryptocurrency, same as the stock markets, higher inflation, lower economic growth, they are increasing the market risk, which is not in favor of cryptocurrencies markets, risky assets generally. But it's not such a big deal right now. These numbers, they were not such a big deal to change the market trend for the cryptocurrencies. But technically, 92,000 is a very high level for Bitcoin. If the price fell under 92,000, can change the trend in the short term, but generally we are still the positive, not so much, but still positive. No, we cannot say that the price can continue so fast higher, but generally we are cautiously positive about the Bitcoin and Bitcoin price for now. This is generally what we had as a data and how the market reacted. If you had any other question, don't forget to write in the comment section. I will try to get back to you as soon as I can. Have a good time. Bye-bye.